efficiency and effectiveness and the sort of coming together of the two using technology. What's been the experience at CAMS? And more importantly, as you look at it from your vantage point today, with the kind of growth that's being envisaged for the economy, for the markets, what is the kind of bets that you will now need to make on the tech side?
We live in very interesting times and in a very interesting space. And I would say the way the industries are scaling, and I'll come to asset management in just a bit, but I'll give you a very different perspective, let's say from the account aggregation part, where think of SME lending, where you needed a mountain of data, a lot of trips to their factories and their homes, etc., to make credit assessment. And in the end, what came out was a credit memo, a printout, which took days creating. But today, under the account aggregation, architecture, you are able to draw the bank accounts, the personal asset information, including mutual funds, depository balances, insurance policies, all of that, and you connect it with GSTN. You can look at cash flow, which means you see somebody's bank account gets ₹1 lakh every day on an average, but throws out 80,000, and you have some sense of economic activity. We are now able to produce the same credit memo in a minute's space after the customer's given the consent. So you can start doing this several thousand times in a day. Sell it for 10 rupees, which means an immensely labor-intensive exercise. You've taken all the friction out. You made it clean. There is no possibility of any forged documents or any of the other stuff that could happen. And you have a very clean, straight-through process basis which lending will begin to happen. And what happens is that I think, like everyone else has said, it's a two-pronged thing. You make it easy to consume, and you suddenly see consumption rise because people who were dreading participating in that activity now believe it can be done at the push of a button. I'll give you an example from the world of asset management, where KYC was, again, a wrinkled exercise. It used to take time. We introduced a 10-minute KYC, which means you can actually come in. And this is completely a cloud-native architecture, which means Anuj Kumar comes in, somebody takes a picture of him or records a video, and then I give all my personal details. The corresponding details are fetched on the fly from DigiLocker or UIDAI.
Right.
The AI then compares all of this and tells you whether it is the same person or not. You pass the test 95, 96% of the time, and your investment ready in 10 minutes. And therefore, the propensity of the person to open the next DMAT account or broking account or mutual fund account just goes up significantly. So it fuels itself. It needs large investments. The workforce profile changes. You end up dealing with a lot of change. But I guess that's the path we've chosen to tread upon, and it's a very exciting journey.
It is an exciting journey. And, on the issue that you brought up as far as the account aggregator is concerned, maybe I'll get Nilesh to comment on that. But I also want to understand this from your perspective. In many ways, things like account aggregator are bringing in a level playing field. So they're also doing away with the moats that perhaps legacy banks or institutions enjoyed, the kind of power that they enjoyed. How do you see these changes bringing about disruptions in existing spaces that perhaps would have taken much longer for us to be able to disrupt?
So principally, I would say one thing which is getting turned on its head is that a bank took 40 years to build a franchise, and the franchise was then your wealth or asset. But today, if you're sitting on 5 crore, 6 crore customers, the data belongs to the customer. Once that principle is established, a young fintech which can do things faster or cheaper than you, is actually completely legitimately drawing the same consumer data, designing an easier to consume product, and if they're able to price it better, they will start getting your consumer to consume it. And therefore, the biggest moat, which was that you're a large bank and the data and the consumer asset sits with you, is now becoming open. And I think the faster it breaks, you will find a lot of disruption just going down that road.
Nilesh, how are you reading the kind of disruption that technology is bringing about, in many ways doing away with the long existing moats that people enjoyed?
So essentially, there will be dinosaurs and there will be disruptors. Dinosaurs will die because they couldn't fathom that things have changed. And disruptors will continue to rise. There was a time when Mumbai, Gujarati and Marwadi means stockbroking. Now, two brothers in Bangalore has created India's largest stockbroking company. this is going to get replicated across entire financial services industry. So for us as asset management company, account aggregator or usage of any other technology is essentially providing better solution to our customers, faster and in a cost-effective manner. If I can marry this triangle of faster, better and cheaper, I think we have won the battle. We are using account aggregator to give portfolio recommendation to customers. We are using account aggregator to recommend certain nudges, which hopefully over a longer period of time will result into better bonding with customers as they appreciate the value of the advice. So there are many exciting opportunities, but at the end, serve customer for a faster solution, cheaper solution, and the most optimum solution.
If I may ask all of you, and I'll start by asking you, Nilesh, on the cost side, the kind of benefits that have been able to accrue on account of just moving faster and faster on the path to digitization.
So one, digitization is front-ended expenditure and back-ended benefits. So you have to do the balancing correctly. Second, you also have to work with regulator to ensure that there is no oligopolistic pricing. For example, I sit on the board of UID and I see at what price they provide identification services to intermediaries. And as a consumer of that data as mutual fund, I know what price I am paying. Today, there is a oligopolistic pricing. Those pricing has to be market determined so that cost can come further down. The third thing, which is very, very critical, is certain basic security and those kind of features. Today, it's possible for someone to lower down the security gate, save the cost, and wait for accident to happen. Now, if those accidents happen, that will have a much higher cost to your brand. So how do you make investments for security? And cyber security is always evolving. The crooks are always one step ahead of us. Fortunately, we don't handle money, so hopefully they'll first go to banks and then come to mutual fund. But security, encryption, protection, disaster recovery, these are all the investments which does not show you value while you're making, but they are most critical.
No, and you're absolutely right. So Tarun, I want to get your perspective on some of these issues as well, because these are critical, and as Nilesh pointed out, they may not be the headlineable stuff or the sexy stuff, but it's actually what keeps the back end going and ensures fortifying individual businesses. So what's been the approach at your end on this front?
Yeah. So see, first of all, I can tell you tech companies know how to make money.
Yes, clearly.
Yeah.
We can see that.
Yeah, so, and the FOMO is so heavy that you have to keep investing. But see, the way I look at ROI and the way I would look at the cost is a little different. Cost of not being there in an agile market, particularly India, because India is not one India.
Right.
So you just got to be there at the right time and everybody's moving quickly. That itself is an opportunity cost which one would lose. So I'm absolutely on the same page with Nilesh that it's not that if you measure cost as kitna paisa kam hua and all of that. So that is not the way it happens. Your cost for tech is only going up and it's front loaded. And it just keeps happening. It's just not that. So for example, people like us, we're looking at a policy admin system. So we'll be the first in Asia. And I would almost bet first in the globe to have a microservices-based policy admin system. So we're working on it. It's taken the blood out of me to get it going. So it's a tough one. But it is a guzzler currently because we are yet to see the benefit. But I know when it comes through, we'll be possibly...
What's the ballpark number for a guzzler?
So ours, because we were the first ones, I think we got it at almost 1/3 the cost of others who will now get it. So that also, of course, you have to get your little pounds flesh. So, so that bit, the investment will keep happening. And you will just have to, like I started by saying, it's table stakes. You just have to be there in the market. You have to be agile. You have to be moving quickly. Otherwise, you're losing space. And I think it shows in the growth rates of players who are able to, kind of keep themselves agile and move quickly.